Hey everybody, Andrew Lockwood here. I've got some data and some info I want to share with you. It's mid-May, time to look at the supply chain and take a look at all the indices, rates, and what is going on. Let's start in the trucking market. Right now we see rates continuing to slide around just above $2, courtesy of DAT. There is some rumblings that we've kind of hit the bottom of this cycle, new freight cycle starting up. That's an interesting perspective, something to check into. Tender rejects remain really low, 2.5%. That means 97.5% of the time shippers are sending load tenders over to carriers. Carriers are accepting. That means carriers are willing and very hungry to take anything and everything. Diesel prices continue to slide over the last year or so. When we look at the overall economy, total number of employees in the trucking industry has increased by a few percentage points, since pre-pandemic, around summer of 2019. But if you look at the truck tonnage, it's actually remained somewhat flat, although it's grown since what we saw with a huge decrease right at the pandemic. So something to keep an eye on, especially from a macroeconomic standpoint moving forward. All right, let's take a look at the ocean rates. They're still very low. We're talking $1,500 to get your container from China over to the U.S. West Coast. That's up a little bit from where I think we bottomed out around $1,000. But still, comparatively, it's so much cheaper than it was even a year ago, and certainly way down from the 20x marks we were seeing at the height of just the craziness and chaos. Total containers, it's on pace to kind of mirror the 2019 lines there in the bottom left. But again, the overall story is just import volumes are way down. The silver lining here is that it has helped ports clean up their act. In fact, we saw a little bit of month-over-month change with LA, Savannah, New York, New Jersey seeing a few percentage points increase in the last month or two from an activity standpoint. Something to keep an eye on is the labor negotiations on the West Coast are still not completed yet. There's some progress. There's no contract. So if you've got a lot of volume coming into the U.S. West Coast, just keep an eye on that because that could be a point of risk. All right, from a warehousing standpoint, the overall story here is it's starting to cool a little bit. There's still a lot in the pipeline. We're talking 600 million plus square feet under construction, led by the DFW and Phoenix market. You've got Inland Empire there in Southern California. But we're starting to see it wane a little bit. And a lot of that is truly linked to the interest rate environment and the ROI that you can get from a construction standpoint. We know material costs have gone up considerably over the last 2 years. And so we're starting to see a little bit of a cooling effect in terms of the total pipeline under construction right now. Total employees from a warehouse and storage standpoint, it's plateaued really since the middle of last summer. Looking at current market rates, interestingly enough, there's been no change in the vacancy rate. It hovers just below 4% nationally. Certain markets are better than others. Inland Empire, there's almost no vacancy. Remember, they were number 3 in terms of total amount of square footage under construction. If you're looking for a great center point in the U.S., I like Dallas, both the rate at 527 from an average standpoint and then 5% vacancy. So it's a good kind of middle ground. If you're looking for cheap in the top 30 markets, Memphis is your place to be. Certainly a super low rate and above average vacancy rate there. And then if you're looking for somewhere close to a port, I'm still a big believer in Houston. I like the overall rent at 611, and then that vacancy rate close to 8%. That gives you a lot of options. All right, taking a last look at a few of the top indices. Cash rate index, no surprise here. We're seeing some mixed results, but overall kind of a downward trend over the last couple months. Global supply chain pressure index is down for the past 3 or 4 months. Trucking conditions, again, not looking good right now. That's where that green line is hovering below the 0. But if you're a shipper, I guess the good news is you've got a little more leverage in the marketplace, right? So you're above the center line there. Well, I hope you've enjoyed this update. Again, I want to do this on a monthly basis. All this data is free. I'm just the aggregator because I want to put together the entire puzzle so you're equipped and informed in your view of the supply chain and what's going on in the market. Until next month, I'll see you then.